Hello weekly options traders, this is Dan and this is a quick video review of our bear call credit spread recommendation on the S&P 500 ETF SPY today, which expired today. And as you know, this is one of our favorite ETFs to sell options on and spreads on option expiration day because they have multiple expirations during the week, 3 or 4 per week. Today's Wednesday and we had another expiration Wednesday. Everything starts with a compelling pattern on the chart. The daily is on my left and I have a 5-minute on the right. The spiders are still in an uptrend. The market internals are overbought, but we have no reversal yet. Higher highs, higher lows. We went through the 200 period moving average. We're in an area of resistance. Breakdowns have been failing. We're above the 20, above the 50, above the 200. But this is the beauty of selling short-term options. I surely wouldn't sell a bear call spread for Friday or anything for next week. But now let's turn our attention to this 5-minute chart. Let me open it up a little bit more even here. So these vertical dotted lines are pre-market. I always include the data on liquid stocks and ETFs in my decision making for entering trades on the market open. Today we had trading the market open with uncanny accuracy as our MT Live. So I urge you to go check that out in our resources tab at MasterTrader. We had a pre-market gap up right here. We have a little bit sloppy. I don't think all these tails are real. But we have higher highs, higher lows. This is the market open, and it ripped up in the first 15 to 30 minutes. It came back, bottoming tail, moved back up. These tails were then our indication of we might be at a top for the day. I sent out a text alert to you all saying if this forms an M top and can't take out the prior high, and I sent it right around here. And so I said, if it cannot take out these tails right here, then we're going to short a 276, 278 bear call credit spread. It was 31 cents at the time, the midpoint. And then I said, let's do it under the low of this bar. And it triggered a few minutes later. Some of our traders got 27 cents as the midpoint. So if you sold a 10 lot, that's 270 bucks went into your brokerage account. We gave an initial stop 276.02. You just put your stop in and you let the computer take you out if you're gone from the office. Otherwise, you manage it like we did. Right into our noon MasterTrader Live, I noticed that it had a climactic buy setup, an engulfing bar. So I said close half at a nickel. Then, no, actually that's not true. I did the nickel, one of these breakouts. I said close half at a nickel and then move the stop 275.82 for the back half. And actually one other subscriber on this beautiful W bottom sold an out of the money put spread against his call spread. And that's called legging into an iron condor. And I was busy with MasterTrader Live at the time, but I told him that was a fantastic strategy. One which we obviously teach in our credit spread courses. Then we were just managing it, and I had another subscriber email me saying, Dan, but look, when I entered this, and he calculated his maximum loss, and I said, yeah, that will be your loss if we get stopped out quickly, like within an hour. But I said, as the clock is grinding towards 4 p.m. expiration, or 4:15 with the extended hour trading, then this short premium is melting like an ice cube. I mentioned in the green trading room, even on this breakout, wherever we got at a half. So the stock was grinding against us. And even way the heck up here at 275.60, we still could have closed it at 6 cents, despite the stock going $1 against us. And that is the beauty of time decay on option expiration day, because we only had 30 minutes to go. And so who was going to pay a lot of money for a 276 call option? Well, we had a nice little sell-off into the close, all the broader market index ETFs. and the back half expired worthless. So that was a great trade. We did it on this M top with two little M's here. Perfect entry, perfect management, perfect execution, so good job on that, whoever traded it. And the only other trade we did, right here, folks, on this 1530 breakdown, I sent an alert out saying, I don't like the action of the airlines and the stock and the market. And we had a bull put credit spread, the 65.62 that expires this Friday. It still looks fine, but the midpoint was 8 cents. And just to avoid 2 days worth of risk, I just said, you know what, it's a trade to me is like another bus coming by. It was a beautiful setup, entry, management, and so now we're in Zulu Sierra. We actually closed out today also. So we're actually flat right now. But with the market, in this one also, it's when it took out the 30-minute low, I said, let's just put the money in our pocket. And that was a good trade. Here are the Qs. Qs are a little weaker than the spiders, so we'll be looking to short a call spread on that on a bounce. I sent an alert out into the close, but we will give you official recommendations when it sets up. IWM holding stronger. This still looks higher, and diamonds looks higher too. So it's not a no-brainer situation, but I like the afternoon crack. And with the overbought internals, we should be picking up the pace on many more bear call credit spreads shortly. Email me with any questions, dan@mastertrader.com. Good trading, and see you tomorrow.